Welcome to the January Market Thoughts video. My name is Maria Considine King, and I'm joined as always by Simon Heslop. Simon, the markets had their ups and downs in 2011. Will you tell us a bit about what happened?
Sure. The markets actually started off fairly calmly in the first half, but the second half we saw a lot of volatility. Fourth quarter was very helpful for markets. A sharp rally in the fourth quarter actually left the Dow up a little over 8%. We saw the S&P still positive in the low 2% range, but hurt a little bit by financials. One of the big highlights was long-term U.S. government debt. We actually saw the long-term U.S. government treasury up almost 30%, which is interesting because most were actually looking for the potential for interest rates to rise on inflationary fears. And so there was a lot of risk there, and a lot of investors actually missed out on that.
There were a few significant themes that influenced the markets last year, and I'd like to run through a few of those with you and get your thoughts on their effect for 2012. Let's start off with the U.S. economy.
Sure. Well, the U.S. economy confounded some of the pundits out there who thought that we were actually looking at a recession in 2011. In fact, we didn't see a recession when we saw some reasonable growth in the economy. We grew at an annualized rate of 1.8%, which is below a trend number, but it's still sufficient enough to have our economy grow and muddle along. It actually helped us to bring our unemployment rate down from 9.4% to 8.6%. Which is a move definitely in the right direction, getting people back to work, getting people spending. We saw initial claims drop below 400,000 towards the end of last year, and that's a significant level because below that level, it's likely that we'll see further job creation and a potential downward pressure on the unemployment rate. So that's good.
The European Union was also a big news item for 2011. Can you speak to that, please?
Well, yes, the European Union weighed heavily on financial markets and created a lot of the volatility we saw out there. It's been a real challenge because we've seen the resurfacing of the Eurozone debt situation, and that situation actually seemingly spreading to some of the larger economies such as Italy, Spain, and Portugal. We look at the first quarter and we actually see 120 billion in euro debt coming due in Italy. So again, we may see this weigh on markets at least in the first half of 2012.
Outside of Europe, there are a number of nations in transition. Can you talk to us a bit about their effect?
Other nations have given us a lot of headline risk, and it's some of the risks that we may not expect that actually came and bit us this year. And the tragic disaster in Japan was the best example. The tsunami and the resultant nuclear disaster created quite a bit of supply disruption. So again, it was one of these unforeseen incidents. And we've had what's been known as the Arab Spring, which is the unrest in North Africa and the Middle East, which has created a lot of headline risk. And that headline risk is not good for markets, the uncertainty, and created quite a bit of volatility.
Well, historically, the stock market has performed well in the last half of a presidential term relative to the first half. 2011 tended to be a bit of a sweet spot, and that was the third year of Obama's term. Do you expect that trend to continue into 2012?
Well, yes, these data are always very interesting. But in fact, when you look at the data, you see that since 1928, markets have actually only shown a negative return on 3 of the election years, on 3 instances during an election year. I mean, there's so many of these data series. You can invest on how the outcome of the Super Bowl, or some are looking at the expression "sell and may go away." But I think, clearly a better strategy is to look at your long-term goals and make sure that your portfolio is aligned with your long-term goals and planning.
Thank you, Simon.
Thanks, Maria.
And thank you for joining us. Please join us next month for the Market Thoughts video.